And next we'll go to the next presenter. Upon Mr. Assoumana Hassane, Management Consultant of Africa Nairobi Regional Office. And his presentation would be on insurance pricing.
Thank you.
So, Mr. Hassane, you have 20 minutes for your presentation. So the floor is yours, please.
Okay. Good morning, everybody, and welcome to the session. The topic of today is quite interesting because it's interesting all Africa sectors. As you can see, as a group technical instructor, I travel across Africa, wherever Africa was participating. So we have several regional offices where I'm doing the audit twice a year. So the topic of today is not new. It's really not, we know, but we pretend to not know. So, anyway, let's move. I think my friend, Mr. Fikru, already covered some part of the presentation. Like the regulatory body, but I'm not going to cover this aspect, but I'm going to compare what Ethiopia is doing compared to the neighboring similar countries like Tanzania, Kenya, and Uganda. Yeah. So this one also is almost the history of the insurance in Ethiopia, which is already covered. You can see here, despite the size of the population of Ethiopia, the biggest in Africa after Nigeria. But in terms of insurance, really, we are far behind. And I can tell you, it's not something that we cannot do. As you can see, Ethiopia is the largest population in Africa after Nigeria. But in terms of insurance, you can't compare. But it's not something that we cannot do. I spent 10 years in Nigeria, and I saw how Nigeria market grow. It was very behind like Ethiopia. Around 1980, no one want to insure in Nigeria because when you insure your car or whatever, when the claim happens, you don't have anyone to respond to you. But, like my friend Tekru has mentioned, is the regulator who brings discipline in the market. We brought one regulator, his name is Fola Daniel, and he increased the capital. When he increased the capital, the small company need to disappear because those small companies are the ones that are undercutting. But when the claim happens, they disappear. He increased gradually, you can't believe, tremendously the capital. Never they merge, or the small will disappear. And what happened to Nigeria? They merged. Big group, international group came in. When they came in, he said, no, you will not create a new company, you need to buy. So the group, an internal group that came into Nigeria, they bought the existing one. No creation of new company. Because when you increase the capital and still you allow new creation, the same trend of undercutting will continue. I can tell you today, all the big groups are in Nigeria today, including AXA. So the problem that Ethiopia is facing really is not new. We just need to wake up. And we don't need even to reinvent the wheel because it's already there in Africa. Many countries sanitize their insurance sector. We just need to learn how they did, adjust to Ethiopia, and move. So if you look at really the key indicator really of the insurance in Ethiopia is almost does not contribute to the GDP of the country. the contribution is very, very low. But I can say one of the reasons is what Mr. Fikru have mentioned, is not to have an independent regulatory, but not all. We need also to professionalize the market and redynamize the market. Because even if you have the regulator, he can only do the law, but the application of law belongs to we insurer. If the law is there, I'm just telling you, some country like Burundi today, they have independent regulator, but Burundi is below Ethiopia again. Donc to have independent is good, but we need also to have we link to clean ourselves. Imagine there is a law in Burundi today, no premium, no cover, but policy is still sold on credit. No one pay premium. I can say the regulator need to act as well, but why the insurance company in Burundi, when there is the law, but you allow to pay on credit? So it's good to have independent, like Tekro has mentioned, but also when the independent regulator came in, the law also need to be enforced. Yeah. So definitely, if we want to really to bring all those improvements, we need also to bring sanitation in the market, both regulator and insurance players. And now, when the regulator also brought sanity, definitely the contribution to the GDP will definitely go up. If you look at Kenya, just at the other side of the border, you can't compare the population of Kenya with Ethiopia at all. But they just wake up very early compared to Ethiopia. Yeah. Well, the regulatory body, my friend Tekuru already covered, but what is most important is just to bring you some comparison. No, I think this is not the last one. Anyway, I have another slide where really I make a comparison of the regulatory of Tanzania, Uganda, and Ethiopia. Like he mentioned, if you look at those three countries, just follow after Ethiopia in this East Africa region, they have independent regulatory body. And because of this independence of this regulatory body, he succeeded really to implement law in the market that redress really the market. And they bring even minimum rate. I share the minimum rate with Ms. Abraham of Tanzania, of Uganda, of Kenya. If the market want to really to adopt the minimum rate, is something you can benchmark. But definitely your rate should be based on your market performance. But the idea here is to see why the surrounding country have the minimum rate Ethiopia doesn't have. While Ethiopia has more challenge than the others. Because today in Kenya, no one can say, I will not pay premium. It's not possible. You have the minimum rate, you collect the minimum rate, you need to pay the premium. And as soon as the client declare, even online today, you have online, you make your complaint online, they respond to you online, and everything is clean. You just pass, you check your check, or you give your M-Pesa number or your bank account number, they will just pay, and you move. So it is possible. So the performance of the market, as you are going to see, I just highlight here the performance for the past 5 years, from 19 to 2023. If you look at, this is by class, this is accident, including bond. And if you look at here, in 2021, look at the net earned premium is almost 1.7. I think we all know what is happening because the bond losses in 2021. But despite this one, look at the premium, from 435 to 436. What is the increase compared to the jump in the losses? That means if we need really to do an actuarial study, the premium that we need to compensate this past losses will not be enough, and even the future. So, I mean, we need to do something. It's not because it is positive that it is enough, no. This is aviation. If you look at it, it is almost in the dark. Aviation is worse. The market almost doesn't have profit on it at all. Fire also, you see, despite that we have really a slight profit on it, but honestly, if you want to make an actuarial study to cover all the costs, the claim cost, the commission cost, and all the one, I don't think we will come exactly into a profit. You have engineering. Engineering, at least, I don't know what is happening, is much better, is much healthier compared to the other classes. Employer liability also. Liability also. You see, so marine also is not too bad, but honestly, accident and fire, today, there is no profit if we want to really to do proper tarification. No. Motor also, if you look at here, I think the main problem of the motor is the retention on the ex-oil is very low. So the selling company are almost like a reinsurance broker, because you are accepting business on profit of the reinsurer. Because whatever you accept, you cede to the reinsurer. The retention level is very low in the market. While, you know, reinsurance is like shock absorber. You open your business for yourself. You don't make business for a reinsurer, no. You get your license to operate for yourself. But reinsurance is just shock absorber. When things went wrong, he will come to rescue. But here is the contrary. Reinsurers are getting more premium compared to insurance companies. So this also we need really to review it, please. So this is really the rate war. You know, competition should not be based on the premium rate, please. Because if you attack my client, there is no problem. I can call the same client. What Fikru have given to you? He will tell you, he give you 10,000. I will tell him, come, I will give you 9,000. He will come back. But what is the problem here? Is the premium of the market that will go down. Next year, you know that I give him 9,000. 3 months before the renewal, you go to him and you tell him, no, I can give you 8,000. He will go to you. But you see, every year premium is going down and no new product. Where are we going to finally to get enough premium to compensate the future losses? So, please, competition should not be based on undercutting. Because at the end, we will get problem of solvency issues. And when solvency issues come out, we will not get even enough premium to pay the future losses. It becomes like Nigeria in 1980. When you have a claim, you don't have any company, any person in the company who will pick your call. As soon as you call first, they know that it's for the claim, finish. But at that time, there is no mobile, by the way. It was the landline. You call for claim, they disappear. Please, let's not go back, because today we are at 21st century. Digitalization, everything has moved faster. So undercutting, please, should not be really the marketing tool today, no. So this one also, if the regulator, the commissioner, the ISD member are here, this message also is for you. Please, you need to sanitize the market. My colleague Fukru just mentioned that it will be independent, but independence is good, but we need to enforce the law. If we bring out, you become independent, you set up minimum rate, please, there should be fine up to withdrawal of the license for the people who will not comply. And as soon as you bring those one in the market, new investor will come in. Because you see, innovation will come with the changes. If you, this big group that are in Kenya, Jubilee, APA, Britam, if they came here, the local insurer will need to lift their standard to meet them. If not, they will swallow them. Opening the market is not bad at all, but it's a competition on quality of the service, not on premium, please. Quality of services. I can tell you today, you have a claim at Jubilee. As soon as everything is correct, next day you have your claim paid. Britam, APA, why not Ethiopia? You should not use the premium as undercutting, because you have minimum rate in Uganda, you have minimum rate in Tanzania, you have in Kenya, it works well. People are not competing on premium, because if you undercut, the guy will report you to the regulator, and you will know the fine. So competition is no longer on the minimum rate. It's on quality of services and loyalty. So hopefully the market already is a big concern in the market, by the way, because market is aware. They work with National Bank of Ethiopia also to try to get some minimum rate to redress the actual trend. But I don't think it was approved. So I think the market is still open, because I think they approached Zamara, the actuarial company, to make a study and to make a proposal for the minimum rate on bond, engineering, and motor. But as far as I'm aware, I don't think it is approved. If you can update me, please. But we need those minimum rate, at least to start with them. Because as you can see, bond is really terrible. Motor, the retention is low. So you market, you are not underwriting for yourself, you are underwriting for reinsurer. Why should not be? You get your license to open your own business, not for the reinsurer. So when I review really this actuarial study for Zamara, I just make those suggestions, please, but it's open. I saw in the engineering, they didn't include the defect liability, defect insurance design. In case really they want to cover it, today what we are giving really across East Africa, it should be 25% loading of the rate. What Zamara has already proposed some rate. So if any contractor want to cover in this rate design defect, the market can load minimum 25% of that rate. But deductible can still be the same. On the bond as well, I just make some suggestion on the bond, because you know bond is not insurance, by the way. Because the contractor should be able to face his own risk. But sometimes when they go to the bank will ask them 100% guarantee. No, they come to insurance company. You insurance company, you tell him, just pay the premium, it's okay for me. But premium is how much? When I saw the rate proposed by Zamara, you have 1%. 1% of the bond value. But if the client go to the bank will ask 100%. But we will just charge 1%, and he came. Even I'm a contractor. My selection is very easy. I will just cross the road. I will go to the insurance company. And you know very well today, I spent 12 years in construction, please. All big contractors are politically connected. is not their fault, it's a business environment. If you are not politically connected, you will not get business in Africa. And no one can do a road if you are not well connected. It's difficult. So people, and you know, contractor is not like insurance where every year you have a renewal policy. Every year you get this contract is for 3-5 years. You don't have anything, it's not renewed. It's not renewable. So you see competition in construction is worse than the insurance sector. So the businessmen, the contractor, the owners, you can't be, they don't sleep. They need to be connected to get business. And now, assuming very change in the regime or whatever, everything will collapse. Because the regime has changed. I have faced the same case in Kenya today. The former regime have given contract to some contractors. The new regime came, he canceled the contract. And with the bond, we are going to pay. So bond is just to put this underwriting requirement, please, to complete the document if we need to go for the minimum rate on the bond. There is no bond without cash collateral, please. No bond without collateral. There is no bond without collateral. Let me be very clear on it, please. No one should accept a bond without collateral. The collateral can be cash or in property value. When it is cash, in addition to the premium, you can ask 40% minimum. This is what we today, Africa, we are giving in the market. At the end of the project, if everything went well, we release your bond. So if it is in terms of value, it should be 100% of the bond value because, you know, when the loss happens, when they call the bond, and you as insurance company, you want to sell this property, you cannot wait till when market is good to buy it, to sell it, sorry. You need to sell it just 1 week, 2 weeks, one move to recover your money. And if you come to a businessman, the businessman knows very well you are in need of cash. He will not give you the best offer. He will just make you an offer and you need to take it because that's what you got. It's better than nothing. So this is why at least we are suggesting 100% of the bond value for the property, please. So the market also is really facing some challenges. As you can see, I think Tetrick Dodo mentioned it, that really the market is not well developed. But we are the player in the market. No one will come to develop the market in our place. We, the regulator, we, the insurance company, we, the insurance brokers in the market, we need to wake up. No one will come to do this job in our place, please. It is not impossible as well. It happens some countries in Africa, they wake up, they are doing very well. Why not us here in Ethiopia? There is no reason. So we have also the finance and strength. As we have seen, the capital used to be very, very low compared to the neighboring countries. But I think in 2022, the commissioner, we thank it for this idea. He increased the capital, but it's still low. It's still low if you compare to just similar following country like Tanzania, Kenya, Uganda. The capital is still low, but it's much better compared to what it used to be in 2013. We thank you for that, the commissioner, but please try to move maybe in the next 5 years because I see this capital is up to 2027. So after 2027 now, when people all meet this capital, let's plan again to increase. Because the retention, I talk about the retention. The retention is linked to this capital. The lower the capital, the lower the retention. Because no businessman will going to expose himself, no. So we understand where come from the retention, the low retention in the market. So capital also need to increase, please, gradually. So we have the underwriting cycle. Please let me be very careful because I have shown you the performance per class for the past 5 years. You see, this positive trend is almost what we call illusion. It is an illusion. It seems to be a profit, but when catastrophe happens, we will be all into a loss. And I give you an example in Kenya. Kenya, the capital is really good. Retention are good. But what the market did, they say, since my retention is bigger, I just need to keep business for myself because I make 10 years, no loss. I'm just giving money to the reinsurer. They just decide just last year to retain the premium for themselves. Unfortunately, I don't know if you are watching the newspapers, Kenya is very, very bad this year. You have this El Nino, the rainfall. I can tell you the industrial area is like a sea. Factories underwaters, bridge collapse. I don't know if you guys are watching. We reinsurer, really, we don't sleep. We are worried. But we know also majority of the big player in the market decided to keep also many premium for themselves. But unfortunately, this year is a very bad, it will be a very bad season for the insurance market in Kenya. So after 10 years soft market, they decided to swallow the premium themselves, but this year I think it will be very painful for them. Now, during 2025 renewal, they will come to try to reduce the retention. Reinsurer also will increase the premium. It will go back to hard market. So this, whatever profit you have, please, we need to be very careful. It's like an illusion. Don't try to swallow everything. Keep the standard. It's very important. Let's keep the standard. It's not because I don't have lost 10 years, 20 years, I decide, no, I'm working just for HORA, I'm working for ZEPRE, I will keep everything for myself. Reinsurance is a shock absorber. It will assist in the bad time. So if you look at we reinsurer, we have many years without loss, but we have our retrocessionaire. If you look at my colleague Haptamu in this room, he can confirm Africa net is 10 million US dollar. Over 20 years, we reported only one loss. Ethiopian aviation crash, I think in 2019, is the only one. But we never decide to reduce. We can negotiate the premium to go down, but not to say that I don't need retro. 10 million, I have never exceeded a loss of above 10 million. I don't need retro, I will keep it myself. It's very risky. So this is also some recommendation which regarding really the commissioner, my friend has already covered it. But here, if you can see, what I notice really is the skill of the market as well. Please, even the regulatory become independent, we should work for capacity building in the market, especially in the actuarial environment, please. We need to invest in actuarial because we cannot do insurance without actuarial. We cannot do banking without actuarial service. And we cannot expect actuarial foreigners to come to do the job. They came, you will pay them very high salary, and after 2-3 years or so, they will go back. And as soon as the market also is not well developed, the actuarial firm cannot also come to sit down here, no. So we need to develop our own capacity building, please. And if you look at Tanzania has College of Insurance, Uganda has College of Insurance. Kenya has College of Insurance. Why not Ethiopia? There is more population in Ethiopia than the neighboring countries. There is no reason. It's when the capacity really, you build the capacity, people will understand pricing, that one also will reduce undercutting. So these, if you can see, they are really the suggestions that really can help if really even we have independent regulatory body, we need to discipline ourselves in the market. So, but mainly my focus really here is on the capacity building. And one thing, the other one is really for the commissioner. Please, even you raise the capital. As soon as you are creating new license, it will not resolve the problem. Because the new players in the market doesn't have any marketing argument that undercutting. And that is what we call to shoot the bullet in your own leg. As soon as you try to increase the capital, lock also the market to avoid new creation. The more you create, capital will increase, but undercutting will still continue. And as soon as undercutting will continue, you will get solvency issues. Yeah. Thank you very much, Braham. That's all.
Okay, thank you very much, Mr. Hassane, for your very insightful and comprehensive presentation and for finishing on time. Please give him a round of applause. So please, you can take your seat. From the presentation of Mr. Hassane, important points were mentioned on the role of the regulator, on the need to make our competition based on service rather than price cutting, and also the need to sanitize the market with regard to practice of premium undercutting. As to the challenges that the market is closed and it's not developed is one aspect. Even compared to the neighboring countries, our market is not that developed. The need for financial strength to improve the low retention of our market and to make the insurance arrangement for work for our interest rather than making underwriting for the benefit of reinsurers are points mentioned. And also on the skill part, which is mainly affecting the pricing aspect, is the actuarial skill that's lacking in the market. So building actuarial capacity of the market is one thing that Mr. Hassane tried to reflect on. As you remember, the issue of our industry has been discussed several times. I'm of the opinion that still there is a challenge on real diagnosis of our problem and prescribing the right solution for the problem at hand. So in the coming session, we have to deal deeply on what caused the problem, because the rate issue has got some historical issues from the very beginning when the Ethiopian Insurance Corporation was formed by nationalizing the then existing 13 insurance companies. And then after, with the coming into picture of the private insurance companies after 1994. These are some issues that we need to see apart from the challenges that we are facing to make rating based on professional approach using actuarial practices. One question Mr. Hassane raised was regarding the minimum premium setting and the exercise made by the Zamra company. For clarity purpose and for the interest of audience, it's good to reflect on this point as well. Attempt was made by the Ethiopian Insurance Association with the kind permission of the National Bank Insurance Regulator. And Zamra has been employed to make a premium study to base a minimum rate for the motor insurance. The study has been submitted for approval for a national bank. And unfortunately, the rate approved by the National Bank and finally put into practice was different from what has been suggested by the study. So the latter is not actuarial based, rather the first one was actuarial based study. So this is a difference that currently exists, and the industry still believes that we have to exercise the one that is perfectly stated by actuarial, or the National Bank should consider the call for proper study and implementing the right minimum premium for the motor. With regard to the points that you mentioned on the bond and engineering class of business, of course the market is using different rates than what has been exercised just before. And those rates in the engineering and bond are mainly reinsurer dictated rates. So whether they really express the right rate for the market is still to be studied based on the merit of the market. As you suggested, the rate should be based on the performance of the market. So we are working for the interest of our own market, and then we have to base our rating based on the profile of our market, how the performance is going.